Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
For this session, people, we're going to look at another book of original entry, and that is the Returns Outwards Journal. At the end of this lesson, you should be able to prepare Returns Outwards Journal, and that is also known as Purchases Returns book. But before we go into that, let us understand what is returns outwards. Returns outwards is also known as purchases returns. And that is basically goods or inventory returned by a business to its supplier. But guess what? Let us look at the reasons for goods returns. Now think about you purchasing something and you look at it and you decided that you're going to take it back to the supplier. Why would you take it back? Similarly to you taking back goods to your suppliers, businesses do the same. And the reasons are, for example, damaged or broken item, wrong order, which could be wrong size, wrong color, wrong model, wrong pattern, etc. Another reason is late delivery. You might have wanted something like probably 2 weeks ago, but then it just arrived. It could be a case where it has no more use to you again. So therefore, you have decided to return it back to the supplier. Another reason, expired item. So for those perishable items that you know carry good to buy date, then if the date has passed, this is of no use to you. It is no longer good. So therefore, you're going to return it. And there are other reasons. Now, let's look at the purchases returns book. It is a book of original entry used to record in chronological order, meaning by date, in order, by date, goods returned to credit suppliers with information taken from credit notes received or debit notes sent. So that would be to the credit suppliers, meaning that you have purchased goods without paying for them. And now you're returning them for whatever reason. Once they are returned to the suppliers, then that must be classified in the purchases returns book. So you make a note of that in that book. Remember, it is also called your returns outwards journal. No, it indicated that the information is coming from the credit note that is received or debit notes sent. So these are the source document that are used for the purchases returns book. But bear in mind, in terms of credit notes, it would have to be credit notes that you received. And if it is debit notes, it would have been debit notes that are sent. We will look further into the source documents for the purchases returns book in another session. What we're going to do now is to look at preparing the purchases returns book. Now, this question is taken from the Oxford Principles of Accounts text, and that is the second edition. Remember, before you start working a question, you have to read it. So ensure that you read your question. And the question reads, Karen owns a shop selling fishing tackle. During March 2018, he returned goods to suppliers that had previously been purchased on credit and received the following credit notes. So notice, Karen received credit notes. And once you receive credit notes, remember, those are recorded in your purchases returns book. What you're required to do is to prepare the records required in Karen's books of account to record these transactions. A, purchases returns book. B, accounts payable in the purchases ledger and the purchases returns account in the general ledger. And you're asked to invent suitable folio references. Bear in mind that for this session, we're only going to focus on A, which is preparing the purchases returns book. So let's move to our worksheet where we will get that done. The first thing that you need to do is to enter your title. Once the name of the owner or the name of the business is given, then that is recorded. And you have to indicate exactly what you're preparing. In this case, it is a purchases returns book. You could have used returns outwards journal or returns outwards book. Now, we're going to enter look at the first transaction, and that is March 11, credit note 242, goods returned to Scott Limited with a value of $275. When entering up the purchases returns book, the first thing that you'll pick up is your date. And remember, that must be recorded in chronological order. Then the details of your supplier. That is your supplier's name. And remember, it would be that supplier that you have purchased goods from on credit that you're now returning goods to. The next column is your source document. And in this case, the column is labeled credit note because we're recording from credit notes that we have received. If it was debit note sent that we're recording from, then your column would read debit note. Portfolio, we're going to use the same process, the same concept that we have used when preparing the folio, writing up the folio for the purchases and the sales book is the same concept. And then your amount, which is the value of the goods that are being returned. So let's go. March 11th, our supplier's name is Scott Limited. The credit note number is 242, and the value of the goods being returned is $275. We'll move into the other transaction, and this is March 18th, and that read, credit note 375, goods returned to Taylor and Sons with a value of $328. Our date is March 18th. Our details is Taylor and Sons. Credit note number is 375 and the value is 328. In terms of our folio, we will look at that when we complete part B and C of this question, but that will be done in another session. We're now going to move into looking at the next transaction, and that transaction is March 29, and it reads, credit note 247, goods returned to Scott Limited. These goods had been invoiced at $550 less a trade discount of 20%. For this transaction, what is the amount that we're actually going to record? We have to record the amount that was due for those goods, meaning the value after discount. How do we get that? There are two ways. The 550 multiplied by the 20% in order to get the discount value, and that is $110. Then we subtract that 110 from the 550, and then that would give us $440. The actual value for the goods that were returned is $440. Remember, the value after discount. So that is one way in which you can calculate it. Or you could calculate that by multiplying the actual percentage that would be due. The fact is you're getting 20% discount. And if you're getting 20% discount, it means that you would pay 80% of the actual value. So in this case, it would be 550 multiplied by 80%. Why? Remember, the 20% is a discount. And 80% of the 550 give us $440. The actual value that we're going to record in the purchases book is $440. So let's do that recording. The date is March 29th. Details of the supplier, and that is Scott Limited. The credit note number is 247. And the amount, the invoice value, the actual value of those goods is $440. Remember, we are recording the value after the trade discount. We're now going to determine the total returns outwards for the month. And having determined that, you're going to close off your purchases returns book. It is similar to that of the concept that you carried out while doing your purchases book and your sales book. So it's the end of the month, which is March 31st. Your details can be total returns outwards or total purchases returns, or you could simply write transferred to purchases returns account. And I strongly recommend this because it will stick in your mind that the total coming from this book should be placed in your purchases returns account, which is located in your general ledger. Or instead of using purchases returns, you can use returns outwards. What we're going to do now is to generate the actual total for the amount column. And that would give us our total returns outwards for the period. 275 plus 328 plus 440 give us a value of $1,043. So our total returns outwards for the month of March is $1,043. And that basically takes us to the end of this lesson. In our next lesson, we will complete part B and C.
Like, share, and don't forget to subscribe.